Moving the needle on founder failure, one conversation at a time. I'm your host, Justin Gordon, and welcome to Startup 2.0 by Spark XYZ. Join us each week as we give you access to some of the top investors and entrepreneurs in the country to help you think through and overcome the top challenges that startups face. Today's guest is Mark Linao, a partner at AET Fund. Mark has been involved in the venture ecosystem here in Los Angeles for a number of years. Mark, welcome to the show.
Hey, thanks for having me.
So with AET, what areas are you focused on?
Yeah, so AET is actually backed by Akatsuki, which is one of the largest mobile gaming developers in Japan. So naturally, we're looking at things in gaming, the future of gaming, but it's a little bit more broad than that. We're looking at the digital entertainment and what the future of entertainment looks like. So we're looking at digital live. Also, we're looking into wellness because the company has a culture around meditation and wellness and things like that. So a company like Calm or Headspace would definitely fit in what we would be looking for.
Yeah, and what stages are you investing in, and what is the average check size with AET?
Yeah, we do anywhere. I think publicly we say we do anywhere from 300 to $1 million. I'd say average check size though has been around 300 to 500 lately.
Okay.
We're not ownership sensitive, and that's a natural question that people ask us. As much as other bigger funds are. Like the ones in Silicon Valley, we typically participate at seed. We've done some pre-seed.
Okay.
So anything, I know the stages are so melded together these days. We do anything pre-Series A.
Okay, so that's what your focus is on that.
Yeah.
And what is that investment thesis for AET?
You mean specifically in those categories?
Yeah,
or thesis-wise?
Yeah, just trying to get an idea of where you're at with that.
Yeah, so we want to invest in companies. The North Star is investing in companies that offer consumer delight or make people's lives better.
Yeah.
And also we want to enable content creators because the company itself is a content creator.
Right.
And so we look at companies that are playing in those fields. For example, we would look at a company that's a marketplace that enables artists to go create something or to go start a business, anything that helps them, for example. And we definitely look at esports, right? Because we're a gaming company, we've done some esports investments already. So things in game or skills training. That's a space that we've done an investment in. We've invested in an esports organization. So things like that, I'm looking in that industry specifically. Also, we're looking at mobile games, not a mobile game, not just an individual mobile game, but maybe we would look at a subscription service for a certain type of mobile or for mobile games or gaming subscription service, right? Things that we also have invested in is we're pretty big believers in live entertainment and live streaming, and that's what we see in Asia. It's not as popular besides Twitch in the gaming space, but things that we've seen happen in Asia with Taobao Live, would be interested in that type of stuff as well.
Yeah.
Because we think it merges there's three things that type of company would kind of cover for us. It would enable artists to sell their products online, and on the consumer side, it's a new form of entertainment. It's entertainment shopping, right?
Yeah.
So it's things like that is what we like to look for.
Yeah, and that definitely gives us a better idea of kind of your process a little bit and what you're looking for. Also, kind of going a little bit deeper, what does that due diligence process look like for you? I mean, everyone has kind of a different process for that. I'm just curious as to what for you that looks like as of now. Maybe it changes, but what does that kind of look like for you?
Yeah, I think it changes, and I think it changes with what we think is, would be good for downstream investors in the future. Also, I think it also changes that we've
shifted our strategy before. Like we've done a lot of VR in the past, and we're not seeing that market take off as much. So we've kind of shifted away from that.
Yeah.
But I think in principle, we like to work with, the baseline things that we look for. Like we want to work with a founder that we could uniquely help. We don't like to be like silent capital per se. We want to be helpful, and there needs to be a personal connection between whoever's leading the investment from our side and the founder or one of the founders. So, and also we have to be really excited about it. Like one thing I look for is like, I look for would I go work for this company
Right.
if I didn't want to do this anymore. So we look for that. And I think you'll hear a lot of things just because the way rounds are being done nowadays. Like, we do look for certain metrics, like user metrics. Like if it's a mobile app, we look for a good ratio between DAUs and MAUs. If it's a consumer product being sold, we look at, what's the repurchase, what's the return rate of a customer? Are they going to be able to make their Series A, which is typically $500,000 a year to $2 million a year in revenue.
Yep.
So we look at those type of things. Like we like quantitatively, our process requires that we furnish like a memo, and like I think a lot of venture capital funds, we kind of have to fight to get our deals done. Like everyone's deals are on the table, then we're like, as a team, we can't make the decision like in isolation. We try to make it as a team and see like what makes sense from a portfolio strategy wise. Like, are we already in a company that's like in that space or not?
Yeah.
So we look at a way to like optimize our portfolio.
So does that add more complexity to that process? And then how long does it end up taking?
It depends. I mean, we've done things as fast as a week, and
Wow.
we've taken as long as a few months because we want to get to know the founder and the founding team. It's a good question because the diligence process is like, I feel like it's a like venture capital itself isn't like as a scalable business like the businesses that we're investing in are supposed to be. So sometimes it's a matter of how many deals am I looking at the table. If I can't get to something, which sucks, because I can't give it my full time and concentration, and then I have to pass on something because I can't give them the right attention they need. And also, so it is a function of how kind of busy we are as a fund and what other deals are getting done. And that kind of makes things bad, but then also I think it actually optimizes for a better match if we do invest.
And through that process, like, what are some of those red flags or reasons why you may not make those investments in the first place?
Yeah, I think things that are not like pharma, for example, we wouldn't invest in, or something that's. What else would we not do? We don't invest in, like, we're a gaming company. We wouldn't invest in a gaming developer or game studio because that's a little conflicting with our business. But so I think things like that we can kind of weed out, or if it's like we've been looking at direct to consumer quite a bit, and I think some categories don't work for us because we're a Japanese company. Like, for example, cannabis is a big thing, but we could never get that across the line.
Yeah.
Doing a cannabis or like a nicotine or like an alcohol. So the kind of the vices, like we can't. That makes it quite easy for us to be like, this is a good idea. I'm sure a lot of investors listening to this are like, cannabis is probably a great idea to invest in. But we can't do that. We're a publicly traded company in Japan. So
a little difficult to do.
Yeah. So things like that. And I'll take this a layer further. We do a lot of reference checking, and I think that's our job as a venture capitalist, and we want to do reference checking with people who know them, the founders and the team, and who don't come referred through them. So it's almost like playing detective. If we hear too many bad references, then it's kind of an automatic like no.
Yeah.
So that's one as well, yeah.
And then are there things that maybe are not as clear that you wouldn't invest in? Those are some of the obvious ones, but are there some things that just aren't as clear?
It depends how far along the company is, because sometimes we haven't done much. I would call it pre-seed kind of angel level type investments. And at that point, you don't really have any data, right?
Right.
What we do revisit every quarter is like our hypothesis on where the world's going, and if this company is building in a space where that doesn't align with our thinking around that, then it's like an automatic no.
Yeah.
Yeah. Like for example, like we've been looking in wellness, and that kind of bleeds into healthcare sometimes, and now we're kind of thinking, now do we even look in that space, and if we do, what spaces are interesting within the sector, and if they're not in those spaces that we have a clearer vision or a really convicted an opinion where we could get to conviction about, then we wouldn't invest in that space.
And you mentioned every quarter kind of evaluating where the world is going. What does that process actually look like?
Yeah, we share a lot of news internally, and we also do it externally through like a newsletter that we run, and also we try to work. We like to pull data on what's being done, like I guess downstream, like not just Series A, Series B investors, but what's going on in M&A. So we talk about that as a fund. Like every quarter we have like an internal like offsite meeting, and that's that's done for like culture building for us, and also to realign on strategy, and these are things that we talk about. So just something I didn't mention is that we invest in India and the US and sometimes Japan. So and we also have been looking at Southeast Asia, but we haven't made any investments there. But we try to have a global point of view, and our process is, I wouldn't say there's like a refined process, but we make a deck of our findings and our learnings of what we learned in this past quarter and how this is reshaping our thinking of the world. I mean, like, obviously I think we have to be convicted, but we have to be flexible enough where our opinions could change, right? We could be wrong that like maybe VR is going to take off again. Yeah. Which we've seen some data points that may suggest that. So, and we've actually done some VR investments in the last year. So we have to make sure that we have a point of view and like a strategy going forward, but that we're flexible given seeing new data points occur in the market.
And what are some of those challenges that you see entrepreneurs facing?
I think especially at Seed, a lot of people try to, I think there's a lot of challenges entrepreneurs go through. It's like fundraising, and I think some of the biggest things I've been seeing, not even just entrepreneurs in general, is like how do we acquire users or how do we get just engagement and users on our product? How do we make sales? Like those things. And I've been seeing also like some products not working correctly, and then that's probably contributing to people not using and churning out and not getting the engagement that they want to go raise their Series A. So for me, that could all be fixed if if an investor who has a network to help them do that, if we can't do it ourselves or help them guide in the right direction. And also that could also be fixed with hiring. So the biggest thing I see is actually hiring. We have a few companies that have been trying to hire for a while, and it's delaying the product. And the founders have like a certain runway before they have to go raise money, and if they're not building product like efficiently, then that makes it tough to hit those metrics that the later stage investors want to see.
And with your fund being more of a hands-on investor, what are some of those things your fund is actually doing to help these founders of the startups that you invest in?
Yeah, I think there's a few ways that we like to help. One company needed some distribution in Asia, so we set them up with and to talk and have conversations with the logistics provider there. Another few companies in my portfolio is like all about fundraising, so how to position themselves and making a presentation, the deck basically for the next round, introducing them to new VCs. I mean, these founders are so busy, their heads down. They're not meeting they're not their every day is like on like with their team, not going out and meeting investors like what my job is supposed to be doing. So so sometimes they lean on me for fundraising. The other thing is I think business development. There's a lot of I think it's your job as a venture capitalist to have relationships in many different sectors and have a network, so you can act like as a corporate development or a business development arm for your founders. So getting customers in, having them run pilots, going through the contracts, so doing a lot of that type of work, I think we help with. And yeah, and another, and then there's hiring, and then the other last bucket I think I like to I think founders have been coming to me for is just like talking through problems. They just need an external. It's almost like it's a little bit like a therapy session, or like being like just being like someone just to bounce stuff off of, to be able to text when things are going great and when things are going bad. It's good for them to talk to someone outside their organization.
And now, how many companies are in the portfolio?
Gosh, there's quite a bit because we have investments in India as well, but I want to say there's around 30.
Okay, around 30.
Yeah, but
I think 25 core. Like the company did like some smaller investments as like kind of like scout deals as well, but those are still investments. But yeah, around 30.
And what are some of those team issues you've seen that can derail a startup?
Luckily, we haven't had that many. I think in one or two of our companies, it was like a third co-founder that decided to split for whatever reason, and those are like pretty big issues, because now you kind of wonder what happens with whatever they were leading and what happens to their, would they buy them out and think there's like all those type of problems, right? We haven't had that many. Most of our issues have been around the hiring piece. But we haven't had, luckily, like knock on wood, we haven't had a lot of like founder quarrels, which is good. Yeah.
Which is really good.
But I've seen it before, so.
Yeah, I mean, when you have seen it, what has it typically been? Like, what has it been about, or just like, is it the equity? Is it the roles of the founders? Like, what types of things that they typically fight about?
It could be about that, but it's also the just like culture fit, and I think there's a lot of founders that I've seen in the past that don't think this is like such a hard job because you're using someone else's money and you're risking capital. So a lot of founders will I think a lot of founders like work a lot, and there's some founders and those founders may think that someone on their team is not bringing it as much as they are. So I think there's a little bit that always causes like anger within a team. What else have I seen? Yeah, I think that's the main thing. Like some founders don't have the same level of work ethic that someone else on the team doesn't, and that causes a lot of conflict.
Yeah, I could see that. I mean, someone's working 12, 14 hours and then someone else is working the 8 or not putting the same amount of effort in, especially depending on equity pieces too. There's so many different things with that.
And a lot of it's communication, and a lot of it could be solved through communication. Sometimes people, sometimes people aren't there because they have families to tend to, and that's totally fine. I mean, you shouldn't always be working 16 hours a day. I don't think it's healthy. It's not sustainable. So there's that too, and I think communication sometimes is an issue. I think things could be in the era of digital and text, emails, something could be read with totally different tone.
Yeah.
So I think that causes problems too.
Is that
and that's perception, right?
Yeah, but how's that work then with so many remote teams, and you have a founder team and then a team that's not in the same location? Obviously, how does that work? How do you see that going?
Yeah, it's tough. I think you have to be. I worked at Amazon, and you have to be pretty much read it as it is. Don't take it don't take things as a compliment, and don't take it as a negative. Take it for what it is.
Yeah.
I think emojis help with that. Funny enough, and also communication. I guess how often you communicate helps. I think being responsive. Some people take not being responsive as a sign of disrespect but when literally people are just like, time blocked sometimes. So I think talking about these things internally is like super important. And luckily I don't have to come in and like fix those issues, but sometimes the founder will ask like, so what do you, like, how should I take this from like a customer that said this to me, or not even someone on their team, and then I tell them like, we can't, your initial response to that is probably not correct. I would look at it a little bit more unbiased.
Yeah.
Right. Yeah.
Yeah. And you mentioned a little bit how they can kind of succeed with that. Is there anything else that, from like a team perspective and at the beginning of their company or early on, that could be helpful for setting them up for success related to those team issues? Would you always, I don't know, suggest they be in the same location, suggest they have lines of communication in place and know what, set expectations in the beginning? Like, what types of things can they do to kind of give themselves the best chance?
Yeah, I think it's important to set up, when you're setting up a company, actually set the mission so you know what the North Star is, so that your decisions will all like revolve around that, at least broadly speaking. And then the second thing, and you should do this in parallel, I think it's important for them to set cultural values so that people are very specific about how they communicate and how they hire and how they and how they and the work ethic as well. So yeah, I think those things are very important, and we've seen companies in our portfolio do that, and it's definitely been like a game changer.
Yeah, starting that.
Yeah,
right away.
because there's companies I've seen from the beginning start that off, and then we would come into companies that like have already raised a round of funding or whatever, so we didn't see that. But for the minority of the companies that we have done, like we've seen that like be very important. And it sounds like kind of silly because it's like people think it's fluff, but it's really not. So yeah, so like I think I would suggest that.
And now we'll take a quick break and hear from our sponsor, Brex. A big heartfelt thank you to Brex, who without their support, this show would not be possible. We've seen firsthand the difficulties accessing basic corporate credit without providing a security deposit or personal guarantee early on. As companies grow, managing expenses has become more difficult and time-consuming, which is why we've partnered with Brex to offer a corporate credit card that is not personally guaranteed, offers higher credit limits, provides auto reconciliation, and integrates with ERPs using receipt capture. Brex is the credit card of the startup ecosystem, and we highly encourage you to check them out. And back to the show. All right, Mark. So what areas of like investing in terms of just the whole landscape of different ideas and things out there, what are you most excited about in the future coming up here?
We've been paying a lot of attention to cloud gaming. Not exactly sure where we invest in that space. We're still looking at it, but we're watching what Google's doing and what Microsoft is doing. And I'm not sure if you're familiar with like Google Stadia. Yeah. So we're seeing this trend right now towards subscriptions, like we saw in video, and we're seeing this in the gaming space with like Fortnite Battle Pass, for example. So to me, like that's an interesting trend that we're looking to participate in some way. What else are we seeing in terms of entertainment? I still think this space is really fascinating, but this like virtual influencer space.
Yeah.
Like we're looking at like, I guess we call it, or BetaWorks calls it like synthetic media. We actually made an investment in a company that takes samples of your voice, and then they can recreate your voice in any way how they. It's like a deep fake for voice, right? I mean, it's kind of scary, but
no, it's fun. It's exciting though.
But practical use cases are like consumer electronics companies, being able to get the right actor and language and things like that for certain demographics is important to them, and foreign translation, dubbing, things like that, and podcasting, right? Like it's kind of interesting thing that we're seeing in terms of audio and of audio in this space. That's why we did that investment. But speaking of other things that we're interested in, like looking at audio just in general, podcasting has been coming back up. I think since Spotify's done those two acquisitions, it's been an interesting space, and we've been seeing some companies, really good funds, invest in companies that are enabling podcasters to make money, right? And for us, that fits because we're like, these are content creators, and they're trying to find ways to make money and to distribute their content. Like, how do we invest and support that ecosystem? What else are we seeing? Seeing a lot of interesting things happen in the direct to consumer space. I think a lot of I've seen we're not investors in it, but we've seen plays where these brands are reaching their consumers through different medium now, which is like text. It's not just like Facebook and Instagram advertising anymore. They're going direct to consumer, so they need, I guess, different marketing channels. That's kind of one space we're looking at, like just kind of like text communication. What else are we looking at in general? Like I said, like wellness is a space that we're interested in. We did one investment, and it's like a live guided meditation, and we're just like looking in that space in general. I don't know what's going to happen there in the future, but I think the business model of subscriptions in this, because this is like a digital, it's a form of entertainment.
Yeah.
So we're interested in that. We're watching what's happening there in that space. Like, do people just sign up for classes and all that stuff, or can they subscribe and get their fitness delivered to them like live?
Yeah.
Right. Or
yeah, and even with that too, like just looking at different spaces and how the industry's changing, how do you find out about that, and what sources are you looking at to find out information? Who are you talking to? Like, I'm curious on how you actually form that. Like, what's the future going to be? What things are happening? How do you do that? Even, you know?
It's a lot of reading.
Yeah.
I mean, I think I spent a lot of time reading what's going on in the capital markets, and like who's buying what, who's investing in what. Like most VCs, we spend a lot of time on Twitter, seeing who's talking about what. So,
of course.
So yeah, I mean that's literally part of the job. I get up early in the morning to like read what's going on. I try to spend an hour and a half reading just current events and in technology, right?
Yeah.
That's how I get my news. How we form an opinion about it is like kind of what I talked about. Like how we do this newsletter, and we keep track of what's going on, and then we talk about it every quarter. Like, so what does this mean? Like long term? Like, where's the trend heading towards?
Yeah.
And like what kind of like what's in and like what's kind of phasing out.
Yeah, and that's from obviously the industry perspective of different companies, different industries. In terms of VC itself, then, how do you see venture capital changing in the next few years?
That's a kind of a loaded question. So, I used to be a scout, and we're seeing a lot more of that type of activity now, just like scout work, but bigger funds. I think in general things are getting, valuation creep is still there. Things are getting more expensive and stuff. And if you talk to a lot of the founders that came out of Y Combinator, some of them raise at really high valuations relative to what we've seen. And I think that's because there's just like more capital out there in the system. I'm seeing more seed funds pop up and more scout work, and scouts really come from the larger funds. Seeing a lot of that happen in venture. I think it's not exactly new, but I'm seeing more and more and more of it.
Yeah.
Seeing a lot of AngelList funds be created, which is pretty cool. So yeah, I think overall, like I'm just seeing a lot more funds.
Yeah.
And ways for entrepreneurs to get capital.
Yeah, and then kind of in that same vein, then with there being more funds, and there just seems to be way more capital out there as the markets are good for now. You never know what's going to happen. That's a whole other discussion. But then, what should entrepreneurs be looking for in a VC or in an investor? What are some of the things that entrepreneurs should be looking for? Because obviously, there's the VC side of it where they're looking for founders and entrepreneurs, but there's the other side of it too, where the entrepreneurs are looking for certain investors. So, what should they be looking for as an entrepreneur in a VC or an investor?
Yeah, definitely some subject matter expertise. I think that helps if you're a founder and you're, in the plug here for gaming entertainment, you should be talking to someone probably like myself,
Right.
or other funds in here in LA, and there's certain partners at certain funds that focus on digital entertainment. So you should definitely be talking to someone who has that kind of industry experience. So I came from an aerospace background, but I don't work in that field specifically. But I would talk if you were raising for a space tech company. Someone like me who has my background, who's worked in aerospace before, and who runs a fund focus on that, you should be talking to. It's obvious. The second thing is you should be talking to VCs that I guess that you vibe with, because this is a long relationship. And you aren't really gonna know that until you start working with them. But you should just how founders, how we reference check founders, you should always reference your VCs.
Yeah.
I think there's some really smart angel capital out here in LA. There's a lot of smart people that did really well at Snapchat who are out, who have sold companies to Snapchat and now are out investing. You should be talking to those people who's seen, who started a company and taken it to the next level. It just talk to VCs where you think, who have industry expertise that's in your vertical that you're building, and who could connect you to the right people in that industry, and who have access to customers.
Yeah,
right.
It's a huge value add, obviously.
Yeah.
If you're looking for a partner and not just the capital, because clearly, you're going to get money from someone eventually, assuming you succeed with the fundraising side of it. It's what is the extra value add you can get from the investor that helps you grow your company faster?
Yeah.
And just diving a little bit deeper into that process, what are some of those questions maybe that entrepreneurs should be asking VCs, especially if someone doesn't really have the experience? What should they even be asking an investor in the first place?
Oh, you mean if the investor hasn't?
So just from from a new entrepreneur.
From a new entrepreneur's perspective.
What are some questions they could ask a potential investor to get a better feel for if they're the right fit? Obviously, there's the industry expertise, but are there any other questions that kind of come to mind that, this entrepreneur should be asking the venture capitalist this question? You know what I mean?
You should be asking questions on. Here's some really, I think, a founder should ask to reference with a founder that they worked with that was successful, assuming they have one.
Yeah.
Successful, and one where things didn't pan out. You kind of know how a VC is how they work with a company that didn't quite pan out. I think that it's very telling of if whether or not they really will be supportive of you, or if they're just trying to ride your coattails. Yeah, it's kind of a hard conversation for me to have, because it's because as a VC it's tough. Most of the companies do fail, and our time is very limited, and we're supposed to be spending time making the winners win more. But you especially at the early stage, you never know where these things are going to go, and I think it's important for new founders to reference how the VC has worked. Be very direct. Just ask, have you worked with this founder or this founder before?
Yeah.
And asking for an intro to them. I think those are pretty important, and they can be very specific, how they help them fundraise, how they help them introduce the customers, how they help them, in other ways that are top of mind for them.
Yeah. That's the closest thing to being already having them as an investor, right? It's just talking to people who've already had them or have them currently as their investor. It seems like a kind of a quick way to get a feel for what they're going to be like moving forward, because like you said, it's a long-term relationship. It's not ideally, it's a very long-term relationship where you have a lot of success on both sides, and you really have to have an understanding of what you're getting yourself into.
Yeah. Totally. It's the founders that just take the money without thinking about it. It seems like, I think in the middle of it, oh yeah, I'm this person who doesn't even know know him, he's going to give me money. It gives you kind of like a high, and you're like, oh, cool, I'm validated. But I think it's important to take a step back to understand, like, is this person going to be really hard to deal with? Like, because venture does come with like strings attached, right?
Yeah, I mean, they're investing for a reason.
Yeah, you don't want an investor that's asking you for like an update like every single day, because how are you gonna run your business if you're doing that? So, just trying to I think ask questions around how they work with other founders and their communication style, and just see if that works with you.
Yeah.
As a founder.
The one thing too, with you mentioning there being so many like new venture funds out there now, that if you can't get references from
them.
how do you deal with that then as a founder?
I feel like there's always a way to get around.
Think there's
because like the new venture funds that are starting probably spent time in venture before, and knowing, I feel like especially in Los Angeles, every VC like knows each other. Very small community, so just ping someone on LinkedIn. Everyone's connected on LinkedIn. Or on Facebook, so just do it that way.
Yeah, they'll find their investing history in some capacity, or if they've been
you can
successful entrepreneur.
You see how they work, and because we're a new fund, like we've had to go through that process sometimes. So it was like refer us to or introduce us to a founder that you're working with closely, introducing for the founder with another founder, and I'm sure they reference someone I didn't even know about on LinkedIn, and that's fine. They should totally do that because I'm doing that to them as well.
Yeah, well, exactly.
Right?
There's
I think
that.
it's important.
Yeah, and then kind of going just deeper into like how you actually spend your time as a VC nowadays. Like, what? I'm sure it's different day to day, but like, what does your day to day kind of look like?
Good question. It's a lot of, I guess, coffee, tea meetings, or phone meetings, Skype or Zoom. I think I like to break my day out into, like I said, I get up early in the morning and read, and then I'll try to spend like 2 to 3 hours doing like deep work, which is like mainly portfolio focused or just focus on the fund, making sure things are straight, and putting together a newsletter and updating our strategy documents for the next quarter. And then the rest of that time is either meeting with new founders, and then at the end of the day, I like to reserve that for like having dinner with like someone else in the industry who's like a VC or who's like a subject matter expert in a space, or to have dinner with like a founder. So honestly, like those are kind of my main activities. Which is it's a lot of fun.
Yeah. I mean, like that's your job, and you get to meet all these different people.
Yeah.
Seems like a fun, interesting thing to do.
Yeah, it's definitely I look at it like network building, network like nurturing, and then fund stuff like portfolio, and then fund management.
Yeah. And with kind of as a startup nature, you can work all the time. A lot of people do, but you mentioned the whole burnout thing as well.
Yeah.
From the VC side of it, then how are you kind of preventing it for yourself? Burnout.
I'm like the worst person to ask because I'm burning out.
You're like as him.
Yeah, I know. Well, I try to do like at least 8-hour days, but then I've noticed I've been doing like 14-hour days, like back to back, which is like not healthy. So what I like to do is I like to work out and make sure that's on my calendar. I feel like in this space, like we kind of live by our calendar. So as long as I calendar, I gotta stop here. I like literally calendar like when I'm gonna watch Netflix.
Yeah.
You're like, I look at it like as a meeting.
Saturday.
Like, all right, I'll stop. Yeah.
How about Netflix time now? Yeah.
Yeah. So and also another hack I have is like I have like no meeting Fridays unless it's for our portfolio. So I think that has helped. That way I can get all like the work stuff I need to get done, like the desk work, done all on that day. Yeah.
And then is that more a Monday through Friday thing? How about weekends? Is it off on weekends? Is it kind of answer some emails on it? Yeah.
It's like
I figure there's some.
Yeah. There's always a little bit on the weekends.
Yeah, which is kind of expected.
Yeah.
But like you said, if you enjoy it too, it's a different thing versus things if you dread everything, it would be a lot worse, I imagine.
Definitely.
With VC, just curious quickly on, has it been kind of what you expected when you got into it? Because we said we were at Amazon, other companies before. Like, how did you get into VC, and is it what you expected?
Yeah, it was definitely. I don't think it is what I expected. I think once you're on this side, you realize like the work is. I think it looked really glamorous, coming from business school, and I was like, oh, it's kind of like management consulting. I get to like talk to all these high level CEOs and travel, which we get to do. But then there's a lot of hard times, and I don't think people like to talk about that much. And typically they say like a third of your companies like don't do well, a third will be even or maybe make a small return on it, and then the other third of your companies will help you return the fund. And dealing with the problems of the bottom third is or just any company that's seed, I think, in my opinion, because they're still like struggling, they're still seed companies. It's that part is not as glamorous. Like once you see like a company is having a hard time raising or having to like redo the strategy, and I'm like, this is like a big pivot. Or when you've seen people, everyone's pivoting nowadays, but I used to be like, this is so scary, but now it's like very normal. You don't think about those things before you like actually get the job. If you think venture is about sitting back like they do on TV and like being like saying yes or no, that's definitely like not the job. Yeah. Or analyzing a deal and like that. That's probably what it is like early on in your career, but then later it's more like you're much more in depth in certain businesses and in the minds of and just like in the personal life also of the entrepreneur, because that's all affecting kind of the outcome of the business.
Yeah.
Yeah, I didn't know it would get like so like this deep.
Yeah.
Yeah.
Which is a lot.
Yeah,
I'm sure.
Yeah, it's a lot. It's a lot of pressure, but I think investors have the easier job than entrepreneurs, so there's that. But it's I would say the job is pretty entrepreneurial itself, which I don't think I expected as much, because I came from a lot of like corporate.
Yeah.
Yeah. So.
Much different than the VC route you're currently in.
Yeah, exactly. Yeah.
And then just kind of wrap things up here, I'm just curious as to any like best resources for entrepreneurs to help them, whether they're just starting their businesses, growing their businesses, because they need help in many ways. It's so tough to build a business. I'm curious if we know of anything specifically to point them to that may be helpful for entrepreneurs.
There's a lot you can that they can do. Some entrepreneurs don't have LinkedIn yet. I would say definitely set that up. If you're working to raise venture capital, like go on Twitter, go follow the people that you want to raise from, see how their thoughts and see what their view of the world is, so you understand how to build towards that view, and also it's like your own like CRM of investors. So I would say definitely start like list building for entrepreneurs as they get started, especially if they want to work in venture, because it's at this stage for raising capital and getting early customers, it's kind of a relationship game.
Yeah. Oh, for sure. And then Mark, where's the best way to reach out to you, get in touch with you if anyone's trying to contact you?
Email, and I think my DMs are open on Twitter, but yeah.
Awesome.
Yeah, my email. I mean, it's mark@aet.fund, and then I'm on Twitter, so just like
I'm
DM
on Twitter.
me. Yeah, I'm on it, and it's a good way to catch me. Should be saying this, but it's a good way to catch me versus email, because email, it gets like so crowded.
Yeah.
Yeah.
Reach out on Twitter. Perfect. Mark, thank you so much for the time today. Appreciate it.
Yeah, thank you.
Thanks for checking out Startup 2.0 from Spark XYZ. If you want to learn more about startups and investing, you can check us out and join the ecosystem at sparkxyz.io.